Good morning and welcome to Market Moves October 10th, 2025. I am Cheree the Money Lady, licensed with Envoy Mortgage. Okay, so let's talk about some of the things that's happening in the economy and how you, as a real estate professional, can take advantage of these things. The agenda today, first of all, government still shut down. We're going to continue to let you know some of the things that's happening within lending that is affected by the government shutdown. Also, housing affordability has actually improved. So we're going to talk about that for a couple of minutes. And I've got two opportunities for you as realtors. What's the rate? People always ask. This week, the rate ticked up a little bit. It's 6.38%. Remember that this is for your top over 800 credit score, got money, got assets, things like that. I'm still locking people in though in the higher sixes for most of my clients. I did get one client that we gave her a loan estimate for low fives, and I'm going to tell you, high fives, but we're going to tell you a little bit about what happened with that in one of my future slides here. Yes, they're still closed. Government's still shut down. We are starting to see a little bit of softening from the politicians with regards to coming back to the negotiation table. So we hope the government shutdown will end soon. And the government shutdown, don't forget, it affects national flood insurance. It affects federal workers. You may not be able to verify their income, get them to the closing table. USDA loans could be suspended still. If we're dealing with self-employed borrowers and we need to get their IRS tax transcripts, those may face major delays. For FHA and VA, expect to continue seeing slower response with regards to the appraisals and any kind of case processing. And federal courts, if we have to deal with anything with bankruptcies, releases, foreclosures, things like that, that could be delayed as well. All right, so a couple of pieces of good news. Families are starting to move up. That is right. A lot of people had 3% mortgages, 3.5% mortgages, 4% mortgages, and they weren't really moving. They weren't moving up. They weren't moving anywhere. Well, over the past few years, people have had more kids or they're busting in the seams with their current home. And I'm even getting these phone calls. Cheree, we've got to move. So it's actually being reported now that there are some homeowners with sub 4% mortgages who are starting to move. So this is a great opportunity through 2025 and especially for 2026. Also, housing is being more affordable now for our first-time home buyers, or again, young people, millennials, people like that, who thought that their housing, if they were to purchase a house, just was out of reach. Because the rates are starting to go down, we're starting to see seller concessions with regards to being able to help with closing costs, being able to help with permanent rate buydowns. You're starting to see housing become more affordable. And if you're dealing with a buyer, telling them that now is a great time to purchase, because we're starting to see more price reductions, and we're starting to see buyers have a little bit more power in the marketplace, is a great thing. There's just, there's enough inventory, especially in the Fairfax and Loudoun areas, that if you have a buyer who's willing to be a little bit flexible, they can get a great deal, including all of their closing costs potentially paid for them. Couple opportunities for you as real estate professionals this week. Number one is price cuts hold at about 35%. So a third of the market still is having price cuts. We're seeing listings now that are saying, hey, I actually got a call from a realtor a couple of days ago. We found this listing. My borrower really likes this, or buyer really likes this property, and they're offering $20,000 in seller credits. So I told you that I was able to get someone a loan estimate below 6%. We have a veteran, or actually she's active military. She's getting a VA loan, and we were able to get her into a house that is a little bit higher than what I had initially presented to her as her purchasing power, because they're offering $20,000 in seller credits. And what we did was we bought down that rate to 5.875%, and she's able to buy that slightly higher priced property from that. And she's going to have a little bit more money left over for closing costs as well, or to go towards closing costs. So lead with permanent rate buy downs when you are speaking with buyers. Try to negotiate some money, again, to help with permanent rate buy downs. And if you're a listing agent, bring a buy down quote to every showing, every listing appointment that you have. If you need help with that, I'm always here to assist. Christmas money. If you want Christmas money, investors are actively buying right now in order for them to get tax write-offs for their 2025 taxes, which they're filing in 2026. They need to buy a property by December 31st and have it in service. So I keep reminding you that the Christmas money is with the investors. If you have a list of investors in your database, definitely call them, figure out what they're purchasing. I have a couple of investors who are actually buying multiple properties before the end of the year in order to get that tax bill down. I'm available this weekend if you need to call or text us, 571-583-4600. And yes, I look forward to assisting you and to working with all of you. Thanks so much, and I hope you have a very blessed weekend.